So you're learning any free-form style or any Bollywood style or Kuchipudi, Bharatanatyam or any kind of traditional dances. You will be mastering that art. So stocks, you know, it's a very famous kind word that we use in case of the share market. Now, what is a stock? So stocks are also called as a shares. So whatever the investments that you have made, like say for example, you have invested in buying a land. So if you want to sell it, so immediately you can encash it. Hello students, I welcome you to the Unit 1 session of Investment Management subject. So before we move on to the session, I'd like to give my introduction. I'm Vaishnavi, Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So we are going to start with the Unit 1 in the Investment Management. So starting with the introduction of investment. Then we are going to learn about what is the meaning of investment and what is the definition of investment. And we're going to learn what are the objectives of investment. And then we're going to learn about what are the types of investments we have. And we are going to learn about what are the essential features of a good investment. So we'll see one by one the introduction part. Now, so we'll start with the introduction of the investment. So investments are just nothing but, so you are going to sacrifice some amount or some time or some money in the current present time so that you can enjoy the benefits of the sacrifice what you have made after a period of time. Okay, like say for example, so if you are going to engage in some artwork, okay, so you are going to do some paintings or you're going to learn a dance or you're going to learn a new embroidery or any artwork. Okay, now here what happens, you're investing your time, you're sacrificing your other me time or personal time so that you can learn something else. So you are learning dance or you're learning art, that means you're learning any embroidery work or painting classes or anything. Now here, the sacrifice what you have made, the time that you have taken here, so that you can learn that. So what will be the result of it? So after a period of time, you will be mastering that art. So you will be knowing everything about painting. You will be knowing all the strokes or all the color combinations in the painting. You will be knowing everything about dance forms. So you are learning any free-form style or any Bollywood style or Kuchipudi, Bharatanatyam or any kind of traditional dances. You will be mastering that art. So now here, the same can be applied for the financial aspect as well. So now here you're sacrificing some amount currently for now. For what purpose? So that you can enjoy the benefit of that sacrifice after a period of time. So this is a basic introduction or meaning of an investment. So we'll see. So investment is a sacrifice of some present value of the uncertain future reward of any after a period of time, any kind of a reward that you're going to get after a certain period of time or uncertain period of time. An investment decision is a trade-off between the risk and return. So it is about an investment decision should be always in a between the risk that you're going to take and the returns that you're going to take even after the completion of the risk. So all investments choices are made in accordance with the personal investment and ends in the contemplation of an uncertain future. So they are going to, all your personal investments what you are going to make currently now, that is going to give you a kind of a good future so that you can enjoy the benefits of that investments in the coming years. So that's a basic introduction of it. So next is meaning. So an investment is an asset or item accrued with the goal of generating income or recognition. So it is about like, it's a kind of a sacrifice or it's a kind of a thing that you're going to take so that you can get the benefits of it after a period of time and after a lump sum amount. That means after generating the income or recognition from the investments what you have made. So we can continue it in an economic outlook. So an investment is a purchase of goods that are not consumed today but are used in the future to generate the wealth. So this the easy meaning you can understand here. So what is an investment? It is about like the investment is a purchase of the goods or any kind of commodities or any thing that is in a representation of a monetary value, so that are not consumed currently, for current period, that are not consumed today but are used in the future to generate the wealth, to increase your wealth. So in the financial aspect, so an investment is a financial asset bought within the idea that the asset will provide income further or will later be sold at a higher cost price for a profit. So now in case of the financial aspect, so an investment is what? It's an asset. It's an asset that bought with the idea that the asset will provide an income further. It can be sold at a higher cost price for a profit. So it is about like selling the goods or selling the item or selling the asset for in future for a higher price. Best example we can take the investing in land, investing in any building. So now you have bought the building or land for some amount. Then later, after the land prices increases or the building prices increases, you are going to sell it for the profit. Okay, so that you can enjoy the profit that you have got and you can invest the profit in some other investment portfolio. So this is the basic meaning of it. So we'll see the definition. So the definition here, an investment is a purchase of goods that are not consumed today but are used in the future to create the wealth. So an investment is what? It is the purchase of the goods, but those are not being consumed today but they are going to consume in the future with a higher prices and with a higher profit. So then next definition according to Keynes, so investment is defined as the addition of the value of capital equipment which has resulted from the productive activity of that period. So it is about like additional value, that means you have the profit that you are going to get, the additional value of the capital equipped, so which has resulted from the productive activity of that period. So whatever the productivity or the multiplication of the amount that you have invested after a period of time. This is the definition of the investment. So next we'll learn about what are the objectives of it. So first is about keep the money safe. So the basic objective of any kind of an investment is what? To keep the money safe aside. So for reserve. So as I've told, in case of the definition of the investment, in case of the financial aspect, so you are going to safeguard the amount for now so that you can utilize the amount in future basis. So that's the basic one. Next is to help the money grow. This is also one of the important objective of an investment. So why you are investing on it? So why you are investing on a land? Why you are investing on a a house? So why you are investing that? So that you can increase your financial status, you can increase your money. Next objective, to earn a steady term of income. So investment gives you a steady income or steady turn of income regularly, that means monthly or quarterly or annually based on the investment portfolio you have selected. Next objective, to minimize the burden of tax. Investments also are a great document or a proof so that you can save yourself from the tax liabilities. So that means if you are a person, if you're having a salaried person, so if you're having a salary, that means your annual income of more than 6 lakh or 7 lakh, that means you comes under the taxable income. So you should pay some tax to the government. So instead you are going to show to the government that, see, I have said so and so, I have made so and so investments, so I have saved so and so money, so that your tax can be redeemed. So that is also one of the important objective. Next is to save up for the retirement. So retirement is also one of the important stage for each and every person. So we cannot work for a longer period of time until we die. Okay, so we need some retirement. So when you are going to go for the jobs, so you are going to retire after a certain age. So after that, your regular income will be stopped. So now how you are going to meet your expenses, how you are going to take care of your family? So by investing now, then so that you can grow the money for that period of time and you can enjoy the benefit after your retirement. Next is to meet the financial goals, to raise your financial status, to raise your financial income, and you can also save some more and more money so that it can be helpful for you and for your family, and you can increase your financial status of your family. So these are the important objectives of the investment. Next is about what are the different types of investments we have got. First is stocks. So stocks, you know, it's a very famous kind word that we use in case of the share market. Now, what is a stock? So stocks are also called as a shares. So what is a share now? So share are some periodic or some smaller quantity of the lump sum amount of the company that they have called for the investing purpose. Okay, so like say for example, a company is there. So a company needs some 1 lakh rupees. Now the company is going to divide the 1 lakh rupees into equal parts or depending upon the company policy, and it is going to call the shares into the market so that they can raise the money from the public and they can generate the money from the public and they can give them the returns in the name as dividends. So that is stocks. Next is bonds. So bonds are just nothing but they're a kind of a debt instruments that are being raised by the government or any government related institution. So it is the basic concept of bonds are like, so here it is a kind of a formal contract between the investor and the issuer. So here the investor is a person who is going to give the loan to the issuer, and issuer is going to give the certificate of bond with the details of all the face value and how much is a maturity period and how much is a maturity percentage interest that he is going to pay to the investor for period of time. So that contract will be called as a bond. Next is about mutual funds. So mutual funds is also another famous word what we use. So mutual fund concept is all about like it's an agreement between the investor and the company where the company is going to take the amount or appreciating the amount from the investors, and the company people, they are going to invest the funds that they have taken from the investor in different commodities or different portfolios, like in case of equities, in case of commodities, in case of money market. So here the company itself is going to invest in different kind of portfolios, and whatever the returns that the company is going to get from the investments taken from the investor is going to give it back through annual investments or through annual dividends or through quarterly dividends or through monthly dividends. So that concept will be called as the mutual funds. Next is fixed deposits. So fixed deposits, you know it. So for a period of time, you are going to fix the amount. That means a lump sum amount for a period of time, and you're going to get the interest of it monthly and from the banks that you have invested. So that is called fixed deposit. Next is recurring deposit. This is also one of the common form of investment what many people are going to do it. So they are going to invest or they are going to open an account called RD account in banks, and they are going to invest the fixed amount for a period of time. That means like for a year, for 2 years, for 3 years, for a period of time they are going to invest monthly. So that concept is called recurring deposit. Then public provident fund. So this is also one of the important investment activity that has been initiated by the government, where you can open a PPF account in bank and you're going to invest a regular amount for a regular period of time for a regular amount and for a regular period of time, so that you can get the amount after your retirement. So that is called public provident fund. Then is employment provident fund or employee provident fund. So this is a concept that has been adopted by the different kind of government institutions or government agencies or offices, where here the employer will be investing some lump sum amount as well as the employee is also investing some lump sum amount. So both the funds they are going to add and they are going to save it for a period of time until the employee is going to retire. So that concept is called as employee provident fund. Next is national pension system. So the name itself we can tell it is about the pension scheme. So like nowadays after 2016, so many of the government offices, they have stopped giving the pension. So instead of that, they are encouraging their employees to invest in the national pension scheme. So it's same like the public provident fund, whereas in case of national pension scheme, you are going to get more kind of returns as comparing to the public provident fund. Next is options and derivatives. So options and derivatives are the instruments of the money market. So options are like the name itself we can tell option. So here the buyer will be having the option whether to buy or not, or to sell or not the underlying asset that he is going to have in his hand. So underlying assets are just nothing but some commodities or shares or stocks, etc. So those will be called as an underlying assets. So where here the option holder is having the right to sell or to buy the stocks in a period of time. So that is called options. Then next is derivatives. So the name itself is telling it is going to derive the amount from a particular underlying asset. So underlying asset I have just now told. So underlying assets you are going to derive the amount for a period of time. So that is called derivatives. Next is commodities. So commodities are just nothing but your basic commodities like oil or your daily usage products like rice, wheat, or any kind of a product that are being exported or imported in India. So those investing on those will be called as the commodities. Next is gold and silver. So you know about this. So gold and silver are the precious metals. So you can buy the gold bars, or you can invest in gold coins or silver coins, or you can buy gold bonds and silver bonds from the government or through banks that have introduced in their scheming policies. So these are the different types of investments we have got. Next we'll move on to the essentials for a good investment plan. So first is about objective fulfillment. So the basic objective of investment is what? So to have a higher returns. So now you are going to invest some 1 lakh rupees for a period of time, like say for example you are going to invest 1 lakh rupees for a period of 5 years. So now you are going to get the higher returns as compared to the 1 lakh what you have invested before 5 years. Now maybe you are going to get 5 to 6 lakhs or 6 to 7 lakhs for a coming 5 years period. So here your objective is what? So to increase your financial status, to increase your financial return. So investments are that one particular plans that usually fulfill the objective what they have been made up for. Next is the risk factor. So every kind of an investment is going to have a risk. So there are types of risk like systematic risk and unsystematic risk, so that we are going to learn in the coming classes. So each and every investments are being tied up with the risk factor. So next is about the safety of principal. That means whatever the risk that you are going to get, so investments are that one kind of a thing that is going to act like a barricade so that you can not go into losses. So that is called safety of principal. Next is liquidity and collateral value. So liquidity is just nothing but it is having the highest value to immediately turn into a cash. So whatever the investments that you have made, like say for example you have invested in buying a land, so if you want to sell it, so immediately you can encash it. So the investments are in such a way which can immediately encashed into the cash. Then collateral value, that means it is having the equal or agreed value between the agreement. So to whom so you are selling the land, so it is having a mutual agreement between them. Next is about stable income. So it also provides the stable income. So any investments you have made in insurance or in investments you have made in stocks or shares, so you are going to get a regular income from the investments what you have made. Next is capital growth. So with the help of the investments, a good financial plan will always helps you to increase your capital, increase your financial growth. Next is tax implication. So with the help of the investments, you can help yourself from paying the taxes under ATC. So it helps you to reduce your tax burden. Next is stability of purchasing. So it just gives you the more stability to purchase different kind of items after a period of time. Say for example, you have 1 lakh right now, but after 5 years, you have got 6 to 7 lakhs in return of the 1 lakh that what you have invested. So now with the 6 to 7 lakhs, your purchasing power has been increased. Your stability to purchase has been increased. Your financial status has been increased. So with the help of the investments, the stable growth will be happening. Next is marketability. So any kind of investments is always a kind of marketable one. So which is attracts the consumers to invest more and more. So if it is not been attracting more and more, then that is not a good investment plan. Next is legality. So any kind of an investment which has been made by the investor, that should be having a proper legal procedure. So that means a proper documentation should be there, a proper agreement between the investor and the issuer should be there, proper signatures and all should be there. Then only it will be called as a legality. So all kind of investments that you have making, it is all about legality documents. So these are the important essential characteristics for a good investment plan. So in the coming session, we are going to learn about what are the attributes of the investment. Attributes in the sense the features. What are the features of an investment? Next, we are going to learn about investment decision process. So how we are going to take the decision. So what are the step-by-step process you need to take care if you are going to invest in any kind of portfolio. Next, you are going to learn about what is money market instrument and what is capital market instrument and what are derivatives, meaning and different types of derivatives we have got. These are the important topics that we are going to cover in the next session. These are also very important for your examination. So I'll meet you in the next session. Thank you so much.